Thursday, September 21, market analysis, Stan Ehrlich. Good morning. Almost 10 o'clock California time, little bit past the middle of the trading day, and we have the head and shoulder top that I've been talking about for weeks in the process of breaking out today. This is going to be a very important day. It's the beginning of the move down away from the head and shoulder top starting in June. And by the way, I always start with the stock market indexes and the spider, which is on your screen. And I'm going to go to the DIA, Qs, Russell, E-mini, NASDAQ futures, and so on. Futures, some cyclical analysis. And today also forex and sectors. So approximately in that order. So you can speed forward if you want to, if you don't want to listen to some of the stuff we'll be talking about. But most importantly, we have this major 3-month, starting in the middle of June, head and shoulder top in all of the indexes. There are variations on the same pattern, but it's there. Frankly, I haven't seen this combination of patterns developing so nicely so far in many, many years. It's very unusual to see it fit so perfectly. Actually, it makes me a little bit concerned that it's working as well as it is. I don't like that. Anyway, we have a gap down this morning. I talked about it breaking out with a downside gap. Here it is. We are now trading below the neckline on the S&P Spider SPY. We have a minimum downside objective of approximately 406, which you could say is about 30 points lower than the 433 that we are at right now. Now, there's a reason for mentioning 30 points. I'm expecting to see buying opportunities and the October lows in obviously a few weeks. This is September 21st. So I've got 2, 3, 4, 5 weeks or so for it to come down to 406 approximately, and that is a minimum downside objective. I don't expect it to be much more. We're in the area of a 50% retracement, by the way, if we get down to that price level in almost all of the indexes also. So it's fitting together very nicely. Here's our breakaway gap to the downside. This morning, we opened significantly lower. We're now down almost exactly 5 points, which is a fairly decent down day lately, but you'll have to notice that the volatility is increasing. So in a week or two, we may see the average range being something like 6 or 7 points, or I don't know, maybe even more. So is this gap going to be closed? Did we gap down this morning? Considering that it's across or almost across a neckline, there's a darn good chance that that's not going to be closed until this bear move, big downside technical correction is over, and we resume the continuing bull market that started back in October. And I'm starting all my daily charts like this so you can see the October lows on the far left bottom, which was, of course, a bullish and ER signal. My automated trading system picked the bottom of the market to the day. And yep, the top of the market to the exact day on July 27th. We have a bearish engulfing ER sell signal at the highs. So what next? Well, we're getting oversold today. All of these index, almost all of them, I believe, are now yellow, meaning we're in my custom RSI oversold territory, and it does change colors of the candlestick if you're using candlesticks charts and the vertical bar charts as well. So being oversold is not uncommon when you break below the neckline. And here we are, turning oversold, RSI coming down below the neckline. Now, at this point, we're not supposed to come back up above the neckline again. But I am kind of in my mind averaging what we're doing on other indexes at the same time. And I have to tell you that honestly, there's a chance it could just turn around and pop back up, close this gap, and then start crashing again. And I didn't really mean crash, coming down fairly quickly. So it's either going to drop off very sharply for another day or two, which I think is quite possible and not abnormal, or we're going to not close quite as weak as we are at the moment, and closing above the neckline could allow it to pop back up, close the gap, and then drop off below the neckline and start to break off next week very, very significantly. It's coming. I don't see any way around it at the moment. Next chart, we've got the DIA, last October's bottom, bullish engulfings involved, whopping turning points on October 13th. Huge. We're now breaking a trend line very convincingly for the third day or so that attempted to do so back on August 25th, which, by the way, was the low, creating the pivot point for the neckline before the last shoulders formed. And if I didn't mention it, and I don't think I did, I goofed. I wanted to point out that this head and shoulder top in the spider and the other indexes is a very rare version. The last shoulder itself is a head and shoulder top. I talked about it breaking the neckline, and it did so with a downside gap, just about like we're doing now with the big pattern. It's really amazing. So at 447 on Friday of last week, it crossed the blue line, which is the neckline, and that produced a minimum downside objective of approximately 434.30 or so. It reached it today, done, with a downside gap. Now, if you're just looking at that 3-week pattern, you might claim that that's a downside exhaustion gap and we're actually bottoming out. In fact, we are at some support. We are around the neckline, and we are at other support levels, which I think is going to be broken very easily and quickly, either by the close today or early next week, maybe tomorrow, of course, but again, soon. It's just a matter of whether the darn thing pops back up to 438. And I'm sorry to spend so much time on the spider. DIA, everything basically the same. We are at the neckline right now. Minimum downside objective is 324, give or take a squeak or two. There's nothing wrong here. Everything's just plain old doing it. We have another downside gap in the Qs, but the neckline in the Qs is a downward slanting neckline in the NASDAQ in general. So that means as time passes, we have a little bit lower every day, slightly lower downside objective in the Qs. That is now 321 and a fraction. At the beginning, it was support area, interestingly enough, and coming into October, what all matches up. So the October lows could be a very, very important, profound buying opportunity if you're an Elliottian, and Bob Prechter was my client for a long time, an old friend of mine, R.N. Elliott's protege, so to speak, the Elliott wave theorist. So you would think that that would be in October, starting wave number 5, maybe. Now, anyway, enough of Elliott wave. Not a super big fan of it, but I think it's amazing stuff. Now, we're going to have to drop off a chunk more in order to break out of the neckline on the Qs. That should do maybe a day or two later than what is now happening, or I expect to happen in a day or two, and the spider in the DIA. It's just a little bit delayed. Okay, and there's a little gap to close between today's high and yesterday's low. Again, that could be closed even today, which I do not expect, or in the next few days before it collapses. Don't want to use that word, before it drops off fairly sharply. And again, it's just a 50% tracement of the bull market so far. This is not a bear market. It's a bearish pattern and a pretty good size 3-month pattern, not to be ignored. We're at the neckline on the E-mini. There's the small 3-week head and shoulder top. It worked amazingly well. Past tense, we reached the objective today. It took 4 days. That's it. It's only a 3-week pattern, but it's the domino effect that's happening here. That pattern in the last 3 weeks was the last shoulder of a 3-month pattern. And it's a double shoulder, head and shoulder top for the last 3 months. Very unusual, especially when the last shoulder, you can easily make the story, and it worked, past tense, that it was a small head and shoulder in itself. Next chart, we're looking at the NASDAQ futures. Almost to its minimum downside objective on the little 3-week head and shoulder, which is the shoulder of the bigger one. Sorry to talk about it this way, but this is the case. So we have a little bit further to go to the breakout level, and the minimum downside objective there is 13,278. Right, yeah. Oh, and pretty good support too. Interesting. Next chart, and I think we're just going to fly by. Okay, yeah, the last one is the Russell 2000. This is gapping down this morning, but it's coming into an older gap closure. So this is a pretty interesting combination. Left a gap behind and now trying to close a gap from way back on the way up from June 1st to June 2nd of this year. The minimum downside objective on this pattern is 164.70-ish, and that is terribly close to the major bottoms for the previous long-term bear market. Also take note that the Russell 2000 never did make higher highs over multiple months since it bottomed out last year. So it has been forming a giant sideways trading range, which this pattern in the last 3 months says we're going to go down and challenge the bottom of again. Yeah, it could be it could be a great buying opportunity. Sorry to spend so long on this pattern, but it's a very critical day today. Let us go to futures. The E-mini I've shown you already. Next. The coffee. Now I'm not going in the right order here for some damn reason. I apologize, so I'm going to have to jump around. Coffee is in a large trading range. It got overbought, and it's going to probably move back down to 147 in the next several days. Next, Coke Gold had a bullish engulfing buy signal yesterday that did not work. First signal that we've had in a long time that didn't produce good results, unfortunately. But we have a day trade, very small loss. About the opening, it got stopped out almost immediately. So no harm done. Psychologically disappointing. What this is a little more bearish than I'd like to see it. The longer term trend is down. Second time it's broken a bear trend line, it's not holding above it. It's right at it at the moment, I guess, so it is holding. But if it closes near the low of the day or even lower, then it's going to start to make new lows since last March. Next, 10-year notes. Now oversold for the second day, dropping off very sharply for a couple of days. I know what the Fed said yesterday, and of course you can blame it on that, but I talked about this happening before they opened their mouth yesterday. And the bond market, I hope, is next. That's good. And it is oversold today for the first time. Total new lows to the move. I talked about a previous head and shoulder building, but it failed. I said so when it started to fail, and thank goodness. So now we're way in new low ground. This is oversold conditions. We're going to bounce back up again very soon, up to next week, up to 118 and small numbers, and then kind of go drifting lower again slowly, I think. Same thing for the notes. Wheat. Nope, natural gas. Oversold at support. I think it's going to bounce. Next. Overbought conditions finally got to the crude oil market and dribbling down for a day or two, but not very convinced here. This is a long-term bullish breakout. The downside correction could be about to 83 or a little under, and then turn back up again. Next, heating oil. Looks like it's trying to top out. Needs to start making lower lows in the last few days, very, very soon, in order for this top to develop better. That's about the best I can say. Not real good guidance. Next, natural gas. Big sideways trading range and waiting for something to develop. Next, Silver's buy signal yesterday failed. We bought it this morning and got stopped out very quickly and have a day trade loss. But the bigger picture is that there was a buy signal. Not all of them work as well as I'd like. And the market was oversold in a support area that it has been bouncing off of. I still think this is going to go up. The signal didn't work very accurately. I'm looking for a rally up to 25.3-ish. Next, platinum. Backing up a little bit. Neutral territory. Still think it's going to come up and close this gap up to 960 or a little bit higher. Next, high-grade copper. New lows for months, but it didn't stay there. It just kind of bounced off of that big support area that we've got here. Nicely, as a matter of fact. So this could be the beginning of a nice rally, best I can say. Wished it was oversold, not quite. Soybeans are now definitely in the major support area that it bounced off of before, back in August, early August. It's oversold for the first time in weeks again. I think it's about to turn around and start to rally right back up into that resistance area, 1400 plus. Next, at support, trying to hold the bottom of the range in soybean oil. I also think it's going to do about the same thing, but beware. If it doesn't hold and your long position is stopped out, you take a loss. Breaking below these red dashed lines is going to produce a double top formation that is working and a minimum downside objective of approximately 50. So I would consider this one of those zones where if it doesn't hold, it's a flip-flop and you go bearish right away. But if it is holding, and we don't see any evidence of that yet, but it should, we'll get a rally back up to, 62 and maybe even up to 64. Next, soybean meal. Not much to say. Next, corn made new lows for many, many months, bouncing off of it much, and I'm bearish, slow grinding bear move coming here, much like wheat. Made new lows, bounced, couldn't hold them. Resistance, grinding new lows as we come lower, slowly but surely. Today, another new low closed looks likely, and the second lowest low for the trend down. Next, live cattle could be topping out. I'd love to see it drop below yesterday's lows. Then we would get a bearish engulfing sell signal in live cattle, which I think we're coming up to another signal today in a market that has been toying with me for weeks. And we finally got a great signal. I think it was OJ. So let's look in a moment. Cattle probably topping out a bit. Live hogs between a rock and a hard spot. Resistance stopped the rally yesterday. Just great. Turned right, opened lower, turned around and wiped out 2 previous days and maybe 2.5 of trading. So it's now going to try to bounce off of blue. Let's see what happens next. Here it is, OJ, new bearish engulfing ER sell signal, could be extremely profound. Look at this move up. We have had a gigantic bull market. They do top out exactly like this bearish engulfing is doing today sometimes. At a minimum, I'm looking for a healthy, significant downside correction, probably in the ballpark of 311, and it's going to happen fairly quickly and sharply, probably all of next week. Next, cocoa. Overbought conditions started the decline. Yesterday, we saw new lows again, and today we tested a little bit and bouncing slightly in an area of support. Too bad I'm not getting enough indication here that we're going to rally, but it looks like it's a ballpark price level where it could start to bounce back up. Breaking below, closing below today's low would probably push it all the way back down to 3,308 area. No other comments than that. Sorry, a little bit not quite sure. Next, sugar. Overbought, slipping off a little bit. Support area is still a little below us, so there's a chance it could dribble off some more. That's the best I can say. Next is cotton. Resistance stopped it. New lows for a week and a half now. Not a surprise. It's going to probably slip off to 83.5. Next, we're back to the E-mini, still testing that neckline. Let's go to the October low seasonal chart. I'm covering all the way back to October of 2015 on the far left bottom. During that month and a little earlier, it bottomed out and rallied very nicely for weeks. We got slightly late. This is actually November 1st, apparently, the next year. But the point is, approximately October and frequently in October, we see a buying opportunity that produces very big moves sometimes, and sometimes some modest ones. That's a whopper. Lasted a year. The next October, you could have bought practically anywhere and made money, so it kind of worked. Not a low, I would say. There's a low in October, late October. There's a low in early October. Here's a low just before, and I think that is October. I got October 29th. And there is a low 2 years ago on October 5th. Last year, October 13th, bullish engulfing ER buy signal, bottom of the major long-term, well, 1 year bear market. And what's going to happen this year? I think we stand a very good chance of coming down into the October time frame where I've got this green bar. Starts the first trading day of October, October 2nd, and goes to the last trading day of the 31st of October. Inside of this green, and I don't do this very often, circle, is the bullseye for the downside price objective of 407, and it's smack in the middle of October. This looks extremely feasible as to how this market is going to work its way from here, approximately 30 points lower, and get into the middle of this green zone and turn right back up. Boy, will that be something if I can make it happen. Right, sure. Okay, so let's look at forex real quick. The euro dollar is at support, 106, not quite oversold. I think it's going to be a little bit of a bounce. And here I'm going to fly through these charts a little bit differently. We had a sell signal that did not work yesterday in the dollar index. So that's actually a little friendly for the dollar because the sell signal did not work, and it's now rallied up above the fail-safe level. So friendly on the dollar for the moment. Dollar Swiss, overbought, in resistance, probably going to turn down. Dollar yen at resistance a little bit. Looks like it could turn down. It got oversold, and eliminating that, don't see any reason why it can't come down to a 1,311, 1,320 again area. Next, Aussie to the US dollar, bearish engulfing ER sell signal. It is not, because it wasn't quite overbought enough, but a bearish engulfing it is, which I like these kinds of candlestick signals, although you can see it, of course, in the daily vertical bar chart as opposed to a candlestick. Same thing, just displayed differently, same data. I'm thinking this is turning down today. Australian dollar to the US, no comment, frankly. Sideways trading range. Euro to the pound, overbought, probably going to start slipping back down. We're at resistance pretty accurately at today's high. And yeah, look at that. Okay, so it's going to turn back down again. And lastly, pound to the dollar, oversold. Yeah, going to probably flip right back up again at support. Lastly, forex, sectors. I know I'm going on a long time today. I'm just looking for red or green. Well, I'm going to find a lot of red. Going to the top of the group here. Looks a little bearish. Just a moment. And breakaway to the downside, bearish. Excuse me, sell signals on top, bearish, bearish. Sell signal 2 days ago, coming down, bearish. Downside breakout, bearish. Downside breakout, bearish. Downside breakout, bearish, bearish. New sell signals at the top of the market, bearish. Oh boy. 2 sell signals back to back yesterday and the day before, excuse me, gap down and bearish, but oversold. So it could bounce some before it starts going down again. Support, oversold, looks like it could bounce a little bit before going down again. Major historical support, looks like it could bounce. Gap to close, coming into some support, almost oversold, probably going to bounce a little soon. And because of all these bounces I'm saying, that could, the indexes could bounce. And of course, these are sectors, they're indexes of sorts. But 2 days ago, sell signal, bearish. At the top, sell signals, bearish, my. And that's the end of that, ladies and gentlemen. Thank you for staying with me for 37 minutes and a few seconds. Have a great day.